As we've talked about in previous episodes, when we're constructing an offer, there's several dates that we want to be mindful of. But there's one particular term I want to work with today, and that's called the mortgage commitment. Now, on the offer to purchase, there's a contract, there's an offer acceptance date, a purchase and sale date, there's an inspection date, there's a mortgage commitment date, and of course, there's a close date. The mortgage commitment date is basically indicates the time at which the mortgage company will, quote unquote, promise, or someone say guarantee, or commit to lending you the money. Now, to me, there's a lot of loopholes into that. A mortgage commitment is when the appraisal has been done, it has been determined by the bank that the home is worth what you're willing to pay for it based on your specific loan terms, and they are ready in good faith to move forward with their final underwriting process to approve you for the loan. Okay, now, there are a couple things that people put on offers, such as home has to appraise at sale price or higher. Well, when people write that type of language in, it's already kind of understood, because if the home doesn't appraise, the bank's not going to lend, therefore they're going to deny you the loan at that particular amount. So the mortgage commitment is after you've applied, they've verified all your resources, your checking account, your bank statements, your salary, your tax returns. They've run a credit check to make sure there's no additional inquiries, to make sure you haven't picked up any additional credit card debt, you haven't gone out and purchased a new car from the time that you made, they wrote the pre-approval to when they give the mortgage loan commitment. But every time a commitment comes in on that date, it's always going to have some conditions. Those conditions are the home's still got to be intact when they close. They still need to do final verification. They still need to run that surface level credit check. Right? There's always going to be some things up until you actually close, and up until the money is wired, funded, transferred to the seller. There's always that risk that the loan may fall apart. Make sense? So the mortgage commitment is based on verification of all your funds, satisfactory appraised value, and verification of all your creditors, your job, your tax return, that sort of thing, and of course up until closing and approval of the closing disclosure or the HUD. That's when the final commitment comes in. So yes, there's a date for that. Yes, we do require a commitment, but the commitment that comes in doesn't necessarily say that, okay, we're ready to close today. It says that we're going to go into the final underwriting. We're going to put the HUD approval through the final underwriting and get you approved. All right, hope that clarifies the mortgage commitment. Evan, at the Russell team, at Work with Evan. Thank you for listening. Russell Realty Minute.